Today is Thursday, January 11, 2024, and this is a chart of the SPY or spiders before the market opens. It's currently 9:15 a.m. Eastern, and the opening bell is in about 15 minutes. You can see the 8 levels that have been identified to trade against today in the E-mini futures, and 5 of these levels are relatively close together, and they are shown with dotted lines. These areas will be treated as zones instead of precise entry points for any E-mini trades taken there. We'll take a look at how all these levels and subsequent trades played out after the closing bell this afternoon. Here we are at the end of the trading session. The spiders hit 5 of our calculated levels and produced 4 trades. There wasn't a recording of the live trade today. Sorry about that. A setting was incorrect and I discovered it too late. But I'll discuss how the trades played out from the chart here. You've probably already noticed that the non-factor levels that the spiders never got to today have been removed, and the operating levels for the activation triggers have their 5-cent buffer factored in already. So let's get right into it. The spiders hit the 477.55 level early on, but that didn't count. By 9:45 a.m., they were falling pretty hard into the next level down and left that level behind. So no trade here at 477.55. But the next one, quick reaction here at 476.55, but not enough to provide the base hit even after 2 attempts. They came up a few pennies short each time. And by the way, this is why I like to have this 1-minute chart up when trading. It's not really so good for analysis. Larger time frames are better. But with the 1-minute chart, you have the granularity you need to see things like this. As you've seen before, I use the E-mini chart side by side with the spiders, both on the 1-minute chart. So the fact that in 2 minutes, they tried to bounce the required 4 points in the ES, the E-minis, but couldn't do it. It was much easier to see this in the short time frame than it was in larger time frame charts. So with that information, the prudent thing to do in this case would be assume that the reaction happened as it was designed to be, albeit with not enough juice, and just call this one a near miss when they got back down to the entry point, and to call it a wash. But unfortunately, I closed the position a little lower when they started falling. I took a little bit bigger loss. When they didn't react strongly at this level, you start to see where the real destination might be at other levels. You start looking lower. And by the way, I did calculate what would have happened if you'd stayed in this trade and waited to see if signals for fumble would materialize, and I'll talk about that in a moment. But first, we're calling this first one a wash or a slight loss, strictly adhering to the rules, and then wait for the next level down. I mentioned this morning that it was likely that these levels down here, shown with the dotted lines, could be hit in sequence before reaching a base hit, like a zone. So therefore, it would be good to treat this whole area as a zone and adjust your position size accordingly. So buy with a reduced position size at the first and add to the position if we got down to the next one and so forth, if they got there quickly. Well, that's exactly what they did. The first one, when they hit 474.22, did not react enough, quickly fell down into 473.62. And that combined position did produce a solid base hit pretty quickly, and there was no fumble signal here at all during this time. So back to the 476.55 level. Let's say you waited a little longer to see if they would give you the base hit on the third or fourth try here, and after they pulled back from your entry point, bounced around there, and instead of doing that, you found yourself way out of the money as the spiders kept falling. So where would the fumble point have been? Well, I analyzed this scenario, and there was no fumble point. This was because they got down to 474.22 and then to 473.62, all before fumble signals could materialize. Remember, the fumble signals I use are a function of time, not price. So the bad thing in this scenario is that you would have been out of the money a lot, over 20 points in the ES, and that's not really sustainable for many traders. The average entry point for all 3 levels would have been around 474.80, and there was a bounce on that combined position that did produce the base hit with no fumble signal on that one, and it was definitely strong enough to pull the base hit on that combined position. Not saying this would have been easy, but if you had been playing by the rules and weren't overextending yourself on the position size, this trade would have worked either way. And it helps to know what to look for on other time frames, on other charts. The zone down here was very important for a lot of reasons. So waiting for the price to find a bottom here today was just a matter of understanding how price and time converged across several charts on different indicators, and then just letting the spiders do their thing. Again, not an easy trade, but entirely feasible. So I guess I didn't cover the last one, but they did come down to 472.94, and you can see that was a base hit. It looks like they hung out here for a while, and it looks like it might have been a fumble, but they got below the threshold, but they never gave the signal. So that was a base hit. So we'll take a look at the tracking log at this point. So they touched the first level, but that didn't count because it was before 9:45 a.m. So we're calling E a wash because of the near miss, but in my case, a slight loss. and the base hits on the combined positions down, but that's factoring in half position size because that's how I traded it. So the first base hit at 472. 474, 17, 473, 57. Of course, then the actual numbers were different with a 5 cent buffer factored in. Was the first base hit on the half position size, and then this next one down at 472.90 was just a normal base hit, like you would typically see. So that's why I'm factoring in just half the normal ES points for each trade, as you see here. But hope that makes sense. That's it for today. Not an easy day, but playing by the rules, it worked if you were patient. And if you find this approach interesting and this trading strategy, I'd like to hear about it. If you want to leave a comment or question, let me know your thoughts. I'd appreciate it. And please like and subscribe if you're so inclined, and that will help these videos and this channel gain some traction. Thanks, and have a great day.